entity tax structures is definitely a way to look at setting yourself up for financial success for that year. Another item that is obviously of consideration would be super contributions. And what does that look like to reduce your taxes, obviously?
Yeah, absolutely. So look, most physicians have a number of ways that they can reduce tax, and the superannuation is a big part of that. Now, you just got to be very careful here, because if you are, let's say you're a staff specialist, or even if you're a VMO, right, the hospital could be paying your super contributions already to your super fund, and most might have an aware super that they're automatically set up with by the hospital. If you're over the caps, then you might not be able to put any more super contributions in without affecting tax brackets and things like that. So again, just got to be very careful and also seek some advice. But look, you can do up to $30,000 of concessional contributions, or what we call pre-tax contributions. Now, what's included in that 30K is your superannuation guarantee. So the 12% that your employer is going to pay on your behalf is already covered under that. So if you're earning, less than 300,000, I'm just going to round it down, then you should have a little bit of room available to make top-up contributions. Okay. If you're over that amount, then again, seek some advice, or double check that you haven't gone over those caps, because it might mean you're actually paying more tax than you should already. On the other end, if you're self-employed, or if you're only doing private practice work, doing locum work, or you're a practice owner, sometimes you don't do any super contributions at all, and you may not have done any for years. Right? So there's actually certain rules available, like catch-up contributions. Again, subject to certain limits. You've got to have a balance less than $500,000. Okay, to be able to do this. But there's some practice owners that we've done a review with, and they haven't contributed for over 4 years. You've got $100,000 available as a tax deduction today for you in your personal name. It's 47 grand back. Now, yes, you put it into super, you might have a bit of super contributions tax, but you're building wealth. Again, it's understanding what are the opportunities that we have. And if you're looking at that earlier in the year, you're able to make those decisions and cash flow those decisions, more importantly, as opposed to going, how do I pay for it all when it's too late?
So you're telling me there's actually an opportunity to catch up on those caps that you may have missed out on, that you've never even thought about. And then you could be saving on tax because there's only 15% within the actual super fund, right?
Absolutely. That's right. So again, it's, a lot of people, just thinking about it earlier on is going to help. Planning. Another big change that's happening in superannuation is called Payday Super. So for a lot of practice owners in the past, you didn't need to pay your superannuation until you was basically quarterly, right? The 28th after every quarter. That's when you'd pay your super contributions. Going forward, from now on, it's got to be paid at the same time that you pay your wages. For most businesses, that's probably fortnightly. For some, it might be monthly. And for those, that have done it weekly, oh man, that's going to be a lot of admin now. But more importantly, as a business owner, from a cash flow perspective, being able to bank that up and pay it at the same time that you pay your BAS, that's no longer available. So again, July 1, review your cash flows as a business.
It's even more important.
Absolutely. But as an employee or as someone receiving super contributions, it's just as important now to take a look at how that money is actually invested and how it's working for you, because it's going to be deposited into your account a lot more regularly. Now, first question is it actually being invested when it hits your account, or does it just sit there? Again, quick call to your super fund to find out, or seek some advice around that, because, if you're waiting until it's too late, you might have missed out on a whole years of returns on your super fund.
And like being in the property space, what I do find is that, you hear the news, the property market's great or something else, and everyone's, we want to drop in and buy property, right? But they haven't planned themselves financially for the borrowing. They've kind of just jumped in and said, let's just buy something. And when they go speak to the broker, they're like, well, your finances don't look that sharp.
No.
And, and that's where we're saying it's so important to actually plan, but also plan in anticipation of what you're looking to do in terms of an acquisition or a purchase, because the financials need to look sharp, right?
Yep. Absolutely. Like I said, it's first thing you do, review your income.
Yep.
Right? How is your income actually structured? And that's the same thing that any lender is going to ask. The same thing that they're going to be asking for is show me the drafts of your tax returns
Correct.
from last financial year.
Yep.
And again, if you're leaving it till it's too late, till May when it's due, there's a year gone.
Yep.
A year has already gone by. How are you planning for those decisions?
Yep.
How your borrowing capacity that you plan for in July will be all too late by the time you get your tax returns in May. Numbers change. So again, it's just about starting early, reviewing your income at the start, sitting with your accountant, your advisor, your lender at the beginning of the year, and making sure that we're all aligned on what those plans are.
Yeah.
And again, it comes back to you, I guess, Felix, where sometimes you're sitting there, the client's really excited and wants to go,
Yeah.
but no one else in the team is ready.
And that's really setting everything up, right? Or setting the right expectations, but also having the client have the same expectations of what needs to happen through each, I guess, timeline.
Yep.
Because they might think, oh, we saw a great property over the weekend. What do we need to do? And more than often, people make an offer without even getting a pre-approval.
That's the worst thing you can do, Felix. The worst thing you can do.
Yeah. So